right, good morning, traders. This is Blake Morrow, and you're listening to the FACE webinar, and I'm filling in for Dale Pinkert today, and I'm glad that you guys are all here. And we're going to get started here in just a couple of, well, just about a minute. I'm going to start on the analysis process, but I want to say thank you guys for being patient. It's this week we're not going to have interviews this week because Dale didn't have any set up because he knew it was going to be out. But you're in for a little bit of a treat. We're going to go through all the majors and get the technical levels on what used to be the, well, we have the old bias chart, and some of you might remember the old bias chart from back in the Wise Trade days. We're going to be going through the majors and setting them up there. So I want to, again, thank you guys all for being here. And let's see, Glenn, who is Skippy in our chat room, he says, good day, Dale. Dale's not here today, so welcome, Glenn. Bob, good morning, and Forex Gal, good morning to you as well. And like I said, I'm excited to do this. It's been a long time since I've done this, and some of you might miss my rants in the morning. I wish I had a rant. Well, actually, I kind of do have a rant. I have a little bit of a rant. I guess I got something that we can talk about just a little bit. One of the things that that I don't think I mentioned in the week ahead video is that I think the euro, although maybe I did talk about this, but anyway, I think the euro, even though I think it's recovering right now, and we're going to see a recovery going into this week, I do think that the euro is a big risk to the currency market, and it's not the euro. I think it's Italy is going to be an issue that's going to, the Italian debt issue is going to rear its ugly head sometime this fall. So if you're like me, I'm playing the euro counter trend currently. I'm long some euros, not a huge amount, but I'm long some euros, just trying to play a bit of a recovery. You got to be careful with it. I don't think we're going to get something that's going to necessarily come out and bite us this week, but I think that going into this fall, we need to start being a little bit more cautious with long side euro trades, or you could say short dollar, but I don't necessarily think that being short the dollar is a bad thing, depending on what currency you're trading. So I think that we're going to have to be a little bit more selective in how we're trading the dollar. The euro might be a better play on the short side, let's say against the cable. So and the euro pound, which I'll tell you what, I cherry picked a short in the euro pound on Friday as we were approaching the 618 on Friday at the 89.72 level, and it's rolled over quite nicely. But I do think that the euro is probably going to be a better short. Against, even if it's not so much the dollar, against other currencies out there. But what I'd like to do, hold on, I got a couple comments really quick. Rafal, good morning. JJ says, woot, T-chart in the house. Laugh out loud. Ziggy says, you sure you sound like Dale? Oh, come on, I don't sound like Dale. Dale has a much better face for radio, much better face for radio than me. JT says it's throwback week, and KJ says I'm right with you on the euro dollar target 115, 10, 60 area before a deeper retracement down to 111, 112. And Mario says short euro Canadian. Yeah, euro Canadian is probably a great. Actually, it's something that we don't cover with ForexAnalytix per se, but it's probably more of a hot trade now due to the NAFTA agreement. I actually think the euro Canadian is a great choice to be on the short side for what it's worth, even though I'm not short it right now. All right, but yes, we're going to get started here, and I want to get started with all the majors because we have Steve is going to still join us here in about 30 minutes. Steve is back from holiday, and Steve and Stelios will be here, and I think some of the other guys are going to be popping in throughout the course of the week, so I don't want to take away from their time. I know Steve probably has a few things he'd like to say as he's been on vacation for the last week. He is still actually, he's in, I gotta stop really quick and say this. Steve is in one of my favorite cities in Greece right now. He's in Portahili. Portahili is like this little sleepy port town in Greece, and he's gonna have to correct me if I'm wrong, or Stelios can correct me if I'm wrong. I believe it's a northern port town in the northern Peloponnese, which is it's cool. It's not like your normal port town where you're like right facing outward in Greece. Outward, I mean outward into the ocean. It's a really neat town. I love it. It's like one of those really nice places. I've been there twice actually in Greece. But anyway, that's where he's at this week. But he did want to join in, and like I said, he's got all of his technology and his laptops with him and stuff. So let's go ahead and let's go through these majors. I want to get them out of the way. All right. So here's the euro dollar. Now, the euro dollar, I am expecting, like everybody, and then the problem with this this euro dollar is I think everybody's expecting a move back to 115. Well, if everybody's expecting a move to 115, are we going to make it to 115? What's going to drive us past 115 and possibly up to 115.50 is going to have to be some news. There's going to have to be something that drives us up here. With lack of news, I think the risk of the euro dollar pushing much past 115, it's going to be very difficult to do. But 115 is going to be the natural target. Now, is that going to be resistance today? I don't think you need to write that down for resistance today. I think what we have to write down for resistance today is going to be the highs, which is going to be basically 114.50, because if we hit 114.50, so let's write 114.50, and I'm going to put an asterisk there. And if you guys don't remember, for those of you that, well, there's many of you that aren't listening or haven't listened in back when I did for 13, 14 years these bias charts with the Wise Trade group, and by the way, this is something that I do every morning. You might not see me do it, but if you're in the chat room, and guys, here I'll just say hi to those people that are in the chat room right here. If you're in the chat room, you guys still get the bias chart. I still do it every day, and I publish it for everybody here. And it's because it's something that I've done since I first started trading. All right, and I've always done a bias chart. Even when I traded equities, I did a bias chart. And basically, the way I look at it is, it's really telling me where key support and resistance levels are, and what my overall bias is. Now, that doesn't mean my intraday bias might be a little different. Like, for example, the euro dollar I know is bearish. Okay, I know it's bearish. Does that mean I'm going to trade the euro dollar to the short side? No, not necessarily. Like I'm long right now, but because I know it's bearish, because I know the trend is here. Let me draw this out for you guys. Let me make sure I got a good pen color here. Because I know the trend is down, right? I know the trend is down. We're making lower lows, lower highs. Now, we're currently bouncing, but, lower lows, lower highs. I know the trend is down, okay? Whoops, I didn't want to do that. Let me erase, there we go. I know the trend is down, so if I'm trading counter trend, okay, I'm gonna just take smaller positions, all right? And I do believe that we're gonna do something that looks like that. I do. So therefore, if you're long, and you're trading counter trend, you just got to take smaller positions, because you don't want to overextend yourself when you're going against the grain, and that's basically what I'm doing here. All right, so euro dollar 114.50. Now, if we clear 114.50, I think that's and obviously we're gonna have to see what's happening with other with other pairs too, but I think if we break through 114.50, the risk is that we might, you know, make our way back to 115. We do have an inverted head and shoulder pattern here. Now, I do believe that right now support is going to be right here at 113.50 or 113.45. We can write 113.50 is going to be support, okay? Because then that's going to invalidate that little inverted head and shoulder pattern that we see. All right, let's go over to the, whoops, didn't want to do that. Let me get rid of that. Okay, let's go over to the cable. So the pound, I am also long some cable. I've been long since last week, but we have popped out of this down channel. Now, as far as the cable goes, this one gets a little tricky because you got to think, okay, well, if we are recovering currently in the pound, where are we going to recover to? And you know, first and foremost, I think the 24% retracement of this whole move down comes in at the spike low at 128.25. I guess that's the high right there. 120. I'm looking for 128.27. Okay, so 128.25. That's really going to be resistance. It's the 24% retracement, so 128.25. That's going to be pretty key resistance in a downtrend. We are obviously in a bearish trend. All right, now, is it trying to reverse itself? Sure, it is. I think it is, and I believe while we're trading above this trend line here, which comes in at 127, let's say roughly 127.25. The risk is we're just doing some backfilling. All right, so yeah, and just to answer your question right now, yeah, am I long? Yeah, I've been long since last week. I started buying down here. You might have asked, well, Blake, why did you start buying down here? And the reason why is I thought it was extremely oversold. DSI was off the charts low. I believe it registered two sixes. Wednesday and Thursday registered 6 on daily sentiment index, which is obviously extremely low. Yeah, so I believe that we're in a recovery phase now. Does that mean I think the pound is going right to 140? No, not necessarily. Do I think we're going to recover back up to 128.25, maybe back up to 130? Sure. I think that's more realistic on what we can expect right now. Does it mean it's going to happen? No, but that's what I'm hoping is going to happen, because nothing goes straight up or straight down in a straight line. We've moved down quite extensively over the last several months. I mean, you take all of summer, we've lost, what is that, maybe 15% of its value in the cable. So do I think it can bounce a percent or two? Sure, I do. And that's why I think that we will make it back to, maybe 129, maybe 130 before rolling over again. Okay. So there's the cable. Let's take a look at the Aussie. Let's get the Aussie out of the way. So Aussie has an inverted head and shoulder pattern. You can see it clearly. I actually have a pattern in play for the Aussie, established that on Friday. I believe it was Friday. Yeah, because it was Friday actually late in the day, because we busted through the neckline here. And I did play it to the long side. I'm not long the Aussie. I took it off the table before the weekend. Kind of wanted to see how we're going to respond here, and I still think it looks fairly favorable. Now, you can take this resistance right here, comes in at 73.25. Okay, that's current resistance, and I think that actually it's 73.20. So I think that's and I know we're not too far away, but I can go 73.20. Next resistance, since we're so close, would be up to the 73.75 level, which would be the extension of this this inverted head and shoulder pattern. So I'll do this 0.7375, and believe it or not, it is still bearish. I know we have this bullish setup, but notice where we're holding. We're holding below this major breakdown point here. You can say, well, we're right there. We've kind of been above it. Yeah, but it's a vicinity. We're within vicinity of this, breakdown point. We're still holding below it. We really need to get a foothold above like 73.25, 73.20, like on a sustained basis. Like we need to spend an hour or two up here for us to be able to move up here. all right? And right now we're not getting a sustained break. A sustained break tells us that there's real buying or real selling at a certain level. You know, I don't easily fall for those spikes. You know, like you spike up and then you spike right back down and you go, oh, that was a false breakout. You know, I need to see a sustained break, you know, an hour or two above a support or resistance level that I feel is key for me to feel that that a move might be brewing. But for right now, 72.90 is support. I know it's very tight ranges. It's summertime, so 72.90 is minor support. All right, let's take a look at the Kiwi. So the Kiwi is trying to recover as well. We hit this 161% extension of this range, okay, and then we've bounced higher. Now, one of the things about the Kiwi that's really concerning to me is the fact that we're below this like multi-year trend line on a weekly basis. That's like one of the biggest and most concerning things to me, is that we're trading very heavy. So that means any type of recovery back up towards, well, you know, we're gonna have to write, this will be probably pretty important. Should we get back up here somewhere like that? Okay, so you know, any move up to 66.85 we've got to be very, very careful with. Whoops, 66.85, still bearish. Yeah, and yes, we've been bouncing a little bit, but still it's a overall pretty bearish trend, right? Okay, so I mean, you would think that we would see something like that. If the downtrend's going to stay intact. Now, obviously, if we start breaking above, you know, some of that resistance, and there's a risk that, you know, we're going to push higher, you know, like this. If we break above, like, you know, let's just say 67 cents. But there's a lot of work to be done for us to get up there, right? You'd have to agree. I mean, we'd have to do a lot of backfilling, and it'd be tough. So we'll see how we respond once we get to this 66.85. Right now, support. Yeah, it's hard to say. Hard to say where support is here. 65.75 maybe. I guess somewhere down here. It's a pretty loose support. 67.75. All right. Okay, I'm trying to move a little quickly because I know Steve is going to be here shortly, so I want to make sure we have enough time for the other guys to be here. Okay, let's take a look at the Canadian. All right, so we have the Canadian. Now the Canadian got the severe beat down following the inflation data that came out of Canada on Friday. It was inflation data, I believe, if I'm not mistaken. I actually shorted that a couple of times on Friday, made a little bit of money, and I am not trading it right now. I'm like most people. I'm trying to allow for NAFTA, you know, headlines to really dominate the Canadian, but I think we're in a, you know, nice down channel. But for right now, any rally to let's call it 31.15. Okay, is resistance. 131.15 is resistance, and I think we are in a range. You can see we're, you know, in a just sideways range here. Support for right now, we'd have to take the lows right here, and then obviously Friday lows, right? So this is support, pretty key support, because if we break this, then we got like some sort of flag pattern. If we break this, we're going to the lower end of the range, right? And I mean, if you think about like, okay, well, what if the euro continues to recover here? What if the euro, you know, bounces to 114.50? That could take the dollar Canadian down through the support. So that support right now is going to be 130.50, and that's probably pretty key for today. Okay, 130.50. Excuse me really quick while I get some of my coffee. All right, let's take a look at the Swissy. Swissy is range bound. I have nothing to say about the Swissy. Thank God I'm not trading this thing because there's nothing to do here. I mean, you look at the Swissy like longer term. You can see I even have an alarm set for this break if that ever happens. You know, resistance is up here. There's nothing to do. I mean, I've been writing down 90.80, 99.80, and I guess we can write down 99.85 like all last week. The support's at 99 cents. It's right here. I mean, there's absolutely zero to do at this point. Okay, you can see support right there. Oops. That's range. Okay. Dollar peso. So we now, as far as the peso goes, we did break this little triangle here, but you can see we're supported really well ahead of 1880. Now 1880, this is all like the support resistance zone. You can see it right, or support zone all through here. And you'll notice how even though we broke down, we couldn't, you know, really sustain a breakdown. People assume that Mexico is going to put together a bilateral deal with the U.S. first. And since Mexico's in the U.S.'s, or at least the U.S. Administration, not necessarily Americans. The big distinction here. The Mexico is in the U.S. administration's good graces, where Canada is not currently. And that's not true of American, you know, a generalization of all Americans, but it is for the administration at this point. So people think there's going to be a bilateral agreement between Mexico and the U.S. first, and then we'll piece one together with Canada. Well, if that's the case, then the U.S. dollar Mexican peso, you can see, is a little bit weaker than the Canadian and more likely to break through support if there's any type of breakthrough, quote unquote, breakthrough in headlines, in NAFTA headlines. So I think 1880 is good support, but you know, at the same time, if things do fall apart and Mexico becomes a little bit more defiant, then we've got some risk that a move back up towards. We have 1916 here, and really 1939 is obviously key resistance. But I'm going to write down for today, 1916 is resistance in you know, an overall range environment. All right, let's go through the Nordic currencies really quick. The U.S. dollar, Norwegian krone, man, this thing has been extremely strong. We broke a big multi-year trend line, downtrend line, and the scary thing about the Norwegian krone is it's holding. This is where you start getting that sustained break, and we've got a sustained break above 842. So while we're above 842, it is bullish. 842, that is support, and it is bullish. Okay. Now resistance, we're being capped at 850, so I'm just going to write down 850 for now, but you know, we can obviously go higher if the dollar starts to push. Let's go over to the Swedish krona. Swedish krona, this is Benedict in our chat room, who's a bond trader for a major bank. He trades FX for himself. He had identified this butterfly pattern in the U.S. dollar, Swedish krona, also realizing that, you know, it's a big 88% retracement of this whole move here, right? So, you know, we have this big 88% retracement, 161% extension. That all comes in at 925. So 925 it's 926 actually. I know it's 926 because I was looking at it last week. That is key resistance. It is bullish still, but you got to be a little careful of a reversal here. Now, I was playing the U.S. dollar Swedish krona on the short side last week, closed it for a little bit of a gain just to shore up my positions going into last week. But you know, for right now, we will probably take today's lows, because this spike low down here, that was just it was a bad print at the very end of the day. So it's going to be 915. Whoops. 915 is support for today. And let's take a look at, whoops, that's not what I want. Let's take a look at the dollar index. So the dollar index came out of an ascending wedge. You know, we were looking for a move lower, which we've got this far, and we've pushed almost down to 96. 96 was, just so you guys can see it here, 96 was a big deal on the way up because it was a 50% retracement. It's not really too relevant to me right now. That's why I think that we can still move all the way down towards 95.50, which would be right here. Okay, eventually, before we turn. Now 95.50 was this big wedge breakout, so I think that's where we're eventually going. But for today, 96.10 is going to be support for today, and resistance looks like that spike high overnight, which would be, you can see all these little lows right through here, right? Comes in at 96.40. It's resistance for today. You know, obviously we can go higher than that if the dollar continues to recover, but I think that's going to be, you know, resistance. So 96.40. And we are still bullish. Whoops, not bearish. And I know I have a counter trend short on with the dollar index, but it's still, overall, it's still bullish. I mean, you know, even though I happen to be trading on the short side of the dollar, you know, just trading counter trend, all right? The trend, you know, is bullish. Doesn't mean you have to be, you know, you don't have to be bullish currently. It's just, it is what it is. All right, dollar yen, last but not least, it's disaster. If you guys are trading the dollar yen right now and you happen to be making money, you should really be proud of yourself, because I'll tell you what, this is the price action in the dollar yen right now. It's a disaster. Like, trying to figure out which direction it's going. It's being pulled in so many different directions, whether it's, you know, whether it's risk aversion, risk appetite, precious metals, you know, the dollar. I mean, trying to get directional with this thing is tough. Now, one thing I do want to point out is you'll notice that on the daily chart, these spike lows are being supported as we come close to the 200-day moving average. The 200-day moving average today comes in at 109.90. It is slightly losing value every single day, but I think that any move down at 110.10, which is the spike low from last week, okay, right here, right, that's going to be supported. So, you know, we'll write down, you know, support loosely is at 110, whoops, 110.10, and then resistance, I don't even know what to make of it, really. I guess. I mean, you know, you think about those are the highs today, but even if we take out those highs, you know, you're going to find some previous support over here, right through there at 110.80. So I think even if we manage to eke out a new high, I wouldn't be too excited to rush in to buy the dollar yen. You know, because we're going to find all sorts of resistance right through here. So I'm going to write down 110.80. It's kind of loose resistance, and then I'm going to put it as a range, because, man, trying to get directional with the dollar yen right now, why do it? It's like I said, price action is a disaster. So here's your bias chart. It's been a long time, guys, since we've done this bias chart, huh? Together. For a lot of you, how many of you guys and gals enjoy doing that bias chart together? Marius said wrong typing for the Kiwi. Did I mistype the Kiwi? 6775, 6885. Hold on, let me. Oh, did I guess I did. Yeah, I did. 66. You're right. So 66. Oh, so support would be You're right. I did mistype it. 6575. My bad. Thank you. Here we go. All right. There's it's back. All right. Oh wow, look at all these comments. A lot of you guys. Forex Gal said, fantastic. Blake drawing again. Love this guy. Amir says, missed you, and you missed the dollar yen, buddy. Oh, I was just getting there. Z said, great. Thomas, calm. Paul, Z says, encore. Kareem says, me. So many years of this bias chart. KJ said, Catherine said, loving it. Joe says, I love doing anything with you, Blake. Oh, that's so nice. Sumit says, love it. JT says the bias chart is a work of art. John says, love the bias chart. Clay says, yes, thanks so much, Blake. That was great. Z says, don't stop. Well, I'm going to stop right here because actually Steve's coming on here in a few minutes. And by the way, we didn't have any data coming out today. So Steve, are you here? We got a lot of comments. Thanks, guys. A lot of comments. A lot of comments. Hey,
I don't see him here. He was still driving like 15 minutes, 20 minutes ago. So I don't know if he's going to be here today. But no problem. I'm here.
He's in Port Tahili.
He's in Port Tahili, which is a lovely place, like you said. It's very nice and quiet compared to other places. I wish I was there.
It is a really, really, probably like one of my favorite bakeries that stands out in my memory is in Port Tahili. It's like this little bakery that was so good. It may have changed hands or may not even be there anymore. But the last time I was there, it was great. And we made friends with there was a couple that were from the UK actually that started like the water sports rental place right there in Port Tahili, and they were the coolest couple. And we rented, I forget what we rented from them. We rented like rafts and something else, and just like such a great place. You guys, if you ever get an experience, it's one of those off the beaten paths place in Greece. Okay, but you've been there. I mean, a lot. Is it like normal? Okay.
I've been there once a few years ago, so I didn't stay very long, so I don't really remember much.
Oh, okay. Okay.
Yeah.
So, yeah, and I don't know why my father-in-law, why he loves going there, other than he just loves the town. Maybe I forgot the story, but probably someplace that he went as he was younger. But where in Greece is it relation to Athens?
It's in the Peloponnese, so southwest of Athens, but it's in the northern part of the Peloponnese, like you said, northeast part of the Peloponnese. So it's very protected. It's actually quite close to drive there, so it's nice.
So it is in the northern part of the Peloponnese, from what I can remember.
Yes, it is. Yeah.
Okay,
yeah.
all right, very good, very good.
Okay.
So Stelios, what do you? I'll be here. What's
fine. I can take over for a little bit. I can take the screen and.
Okay, and I'm gonna still be here. But what do you got going on?
Yeah, I just wanted to talk about a few things in continuation to what you said. So I'm going to start with dollar CAD, which is an interesting one, because for me the thing that changed recently was the big inflation print. So Canada is now running 3% year on year.
Yeah, that's huge.
They've hiked twice in 2018 and twice in 2017. They've taken the base rate, or whatever the rate is called, the main interest rate from 0.5% to 1.5%. It's still, it's still historically relatively low, although higher than the ECB and the Bank of England, so other major economies. But I think they have more room to go, and the main problem, like you very well said, is the NAFTA negotiations, and it's frustrating. It's similar to the UK, where they're doing okay, but this uncertainty is holding the economy back.
Yeah. So what happens? Yeah. What happens when they piece together a NAFTA deal? I mean, does the Bank of Canada go crazy and start raising rates aggressively? I mean, that would be my initial thought, right?
I don't think they're going to raise rates aggressively, but the market is going to price a nice continuing hiking cycle. And that's what you want, really. That's what the FX market is going to react to. So that's what I think is going to happen. And frankly, 3% inflation and good employment and decent GDP, and as I've said before, the only main problem is NAFTA and the housing market, which is quite elevated. But then again, which Western country doesn't have an elevated housing market? You know, I have a friend who lives in Montreal, and she keeps telling me, describing to me how expensive you know, flats and houses are, and yeah, I'm like, this is like London prices, literally. So it's you know, the country is doing okay, it's doing well, actually, the economy is doing well, and there is no reason for them not to project a nice steady hiking path for, you know, 3, 4, 5 more hikes, who knows, as long as NAFTA gets solved. And you know, looking at like a medium-term chart here, I've got a weekly chart, and I've been looking at this. We seem to be on a, you know, on a channel here, which I think, you know, if you look at this part, the second circle I've put in there, you know, that's a big confluence there. You know, you have the 23.6 fib. You have this descending trend line, which has been broken, but it might be tested again. And then you have, you know, the bottom end of the channel. So I think it's probably going to grind that way. And then it's going to be the big decision. You know, if there is a NAFTA agreement and, you know, things start looking better for Canada, then I think we're going to go way down, test maybe 120 again. I don't see any reason why it shouldn't do that. Obviously, it will depend on what the dollar does overall, and that's been very hard to gauge. I'm still bearish the dollar in the medium term, but short term, anything can happen.
So why would you be bearish the dollar, being that you know, we're in the midst of this trade war? I think people stop calling it a trade dispute. Now we're in a trade war, right? I mean, I mean, we're actually throwing stones at this point. So being in a trade war, you know, conventional wisdom would suggest that we have a, you know, continuation of dollar strength as the trade war, you know, intensifies. So why would you be bearish the dollar? Do you think that it's all gonna come to a head, or we're gonna make some agreements? And do you think this is all just negotiation tactics and things are going to subside? Why are you bearish the dollar?
Well, for me, trade wars doesn't necessarily mean a stronger dollar. You have to look at the what the whole situation is, and you know, frankly, what I'm seeing is the U.S. administration. I've said this before. You know, they're kind of fighting everybody. You know, they're fighting Mexico, Canada, and China, and they've even talked about putting you know, tariffs or some kind of equivalent with the EU. So it seems that, you know, Trump's administration is just, for some reason, just punching everywhere. And for me, it just doesn't inspire confidence to me. And for me personally, I think the best case scenario for a currency like the dollar, and for most currencies, is to have a completely, you know, free trading environment where anything can be exchanged, you know, with as little as few obstacles as possible. That's the ideal scenario for the whole world. And the US is the #1 economy in the world still. So you would think that, well, at least me, you know, I would think that if they just let things happen more freely and without obstacles and, you know, barriers and, you know, tariffs and all that, that would be, you know, that would be better overall. Now, Trump has a reason why he's doing this. He's not, I don't think he's an idiot. You know, he has a reason. He keeps saying that.
Well, the end game is China, right? I mean, exactly. I would think that's the end game.
Yeah, he keeps saying that, you know, the U.S. is being, how did he say it? But it's been getting, you know, the short end of the stick in terms of the way trade is done at the moment. And, you know, he might be right, but I don't think you know, hold on. I don't think the solution. Solution is to, don't worry. I don't think the solution is to, you know, to go out all guns blazing trying to fight everybody. You know, it's although it can be effective. You know, I'm sure it can be, but you know, I just don't think this is the right way to go forward. And we also have to remember that another reason why I'm bearish the dollar is that you know, Trump himself tweeted the other day that, you know, he doesn't like that the Fed is hiking rates. You know, he has a weak dollar preference. I think that's obvious by now. And when he was elected, people were suggesting that, but we didn't have any proof. And now it's becoming a bit more obvious. So I don't think he wants to allow the dollar to appreciate, even though he shouldn't really have a big say in this. But I don't think he wants to. And the thing we also have to remember is that with the dollar strengthening in 2018, we're already seeing ripples of what's happening to the emerging markets, and they're becoming under stress. So, if the dollar strengthens a lot more, then emerging markets are going to be in big trouble, I think, and that will have an effect on the whole globe and in the US as well. So I think it's a little bit of a situation like in the EU and the European crisis in Germany. During the European crisis, Germany had actually done really well. They were the euro was deflated, so they could export more of their products at better prices, and sorry, not the better price, but they could export more of the products, and they were growing at a really good pace, while the rest of Europe, or actually Southern Europe, was really struggling. So Germany at the time, they kind of, they wouldn't say this, but they kind of wanted the situation to remain, the status quo, to not change, because it was really good for the German economy, but they didn't want it to go too far so that, the European Union implodes or something. That would be really bad, obviously, for everybody. So I kind of think that the US, they don't mind the strong dollar, but there is a limit where they have to do something to stop it from appreciating too much, because it can have, like I said, ripple effects all over the world. Now, actually, talking about dollar CAD and what I think is going to happen, we should also look at oil, because Canada obviously has a big is dependent on oil to a certain extent, because it's an oil producer. And this has been my weekly chart for oil for WTI for some time, and it's actually spooky how it's following this blue line down in this area here. And I thought, when it got to 70 plus $75, we all said, or we didn't get 75, but almost, we were all saying, okay, this is probably enough for now. We're going to be range bound a little bit between this zone at 60, 62, and the high area in the high 70s. And it's actually materializing, and it kind of makes sense. I think that the oil market right now is pretty well balanced, and we do have, as always, we have shale producers which are doing better at these levels, above $60. They're becoming more profitable. So the rig count increases, albeit at a slow pace, but it does. And countries like Saudi Arabia and those countries over there who have a lower production cost, well, they're doing absolutely fine, and they're actually even starting to increase production a little bit. I think Russia increased production, so we're kind of balanced between supply and demand here, but we have to remember that oil is always sensitive to any kind of black swan events that can happen. We've seen this many times. So I think oil in this situation is probably going to be range bound between 60 and 75 or something like that. But watch out for any kind of geopolitical situation that's going to make it shoot higher. And also going back to the Canadian, it's been solidifying, it's been consolidating, in below 132, 131, even as oil has been dropping. So that's another thing to remember. When oil bounces, which I think it will bounce, then the Canadian dollar will look pretty good. I think will look pretty good for a rebound. So dollar CAD to drop further. So that's my view on oil. Let's go to what else? One of my favorites. I'll have a look again. Sterling Kiwi, which I really like. The Kiwi is one of the currencies which I said at the beginning of the year I thought was going to underperform, and we had the new government who they were quite clearly in favor of a weak currency, and now we also saw the central bank being very, very dovish last month, or was it this month? It was a couple of weeks ago, and I think the Kiwi will continue to suffer, and I think it will be one of the, by year end, it will be one of the currencies that's going to be underperforming, the other major currencies. And sterling Kiwi in particular is one of the pairs I really like to be long of sterling. You can see this zone here around 190, 188, 190. 190 is my personal target. And, I thought it would have bounced already, but it hasn't. It's taken its time, as sterling has been, pretty weak in the past few weeks. Like Blake said, it's lost 15% against the dollar. But I've said this many times. I think the UK will find some kind of a middle ground with the EU, and sterling is going to start flying. And sterling Kiwi is one of the currencies I really, really want to be long of when that happens. Now, it might not get to 190. I might not get my long executed, but this is really what I'm looking at, and I really like that. So let's see, do we have anything else? Somebody, and let's see if you have any questions. Let's have a look.
Hey,
okay, hey Steve, have you arrived?
What's up?
Very good.
Oh yeah, unfortunately with quite a delay, because Jason wasn't helping us actually.
Okay. Well, Blake had this, this device chart, and everybody seems to be really happy with it. So I'm finding it hard to follow.
It's a very old, it's a very old habit. I mean, he was doing it for many years in Wise Trade, and I'm pretty sure that people are happy to have him doing it again. So he obviously went through all the majors already, correct?
He did indeed, yes. And I talked a bit about Canada and oil, and I was not talking about sterling Kiwi, which is one of my favorites. So I don't know what kind of how you're set up, if you have capability to show stuff or talk, but we're going
to find out, because I just came here. I grabbed one of my mobile routers. It seems to be okay. I haven't had enough time to connect to the hotel's Wi-Fi, check if it's okay, etc. I just want to jump in, to offer a helping hand so we can go through some pairs. If so far you can hear me fine, we can also try doing some screen sharing, and I can go over a few pairs. I know that people might have something specific they want to see or ask, so you're going to help me as well. Make sure that I'm not going to be repeating the same things over again, because obviously I wasn't on the webinar earlier. But
sure.
You can go ahead and pass me the screen and help me with the questions.
I'm passing the screen on now, and but I can hear you very well. So I think the connection should be good enough.
I just ran a fast test on my Cosmote router. It seems to be okay.
Yeah, we can see.
Okay,
you.
can you see me?
Yes.
Okay, perfect. So did you speak about the metals?
We haven't spoken about the metals actually, so that's a good place to start.
So let's start with the metals, because what I'm watching here, and I'm very carefully watching this, is okay. Let me start. Let me go over silver to begin with. So what I've been monitoring in silver is this descending channel, which has obviously taken place and guiding silver lower after breaking below the symmetrical channel. I had said very clearly while we were trading in that channel that since this was a long-term symmetrical channel, any breakout from this channel should produce follow-through. Personally, I was interested to follow any follow-through that happened to the upside, because I'm longer term. I want to be long silver longer term. So I had said that if it breaks lower, I still believe that we're going to see some follow through. But personally, I'm not going to be trading it. And we've seen this nice move, because we actually broke below the symmetrical channel. We came back, we retested it, and then we planned lower. We made it almost as far as the flash crash low that we had just below 14. We made it to 1430 actually. And we seem to be rebounding, but personally, I still don't see here the characteristics of some kind of a recovery that tells me that we have a low in place. So okay, we had a nice reaction the first time, meaning on Thursday. We had some follow through the next day. So far today, we seem to be stalling. Bottom line, I really can't yet turn bullish as long as this channel caps price action. I mean, despite having 2 days of a rebound, we still haven't even retraced the big move lower that we saw on Wednesday, right? So, you know, as far as this is the case, as far as we remain roughly below $15, you know, I'm still looking for lower prices. And more or less the same situation is true with gold. So if you see equivalently gold here, gold actually found a very nice support. This was a confluence of a descending channel and a 61.8 fib. So, you know, that was a nice confluence of supports. We did see a nice morning star formation on Friday. So this is definitely a bullish reversal candlestick formation. But so far, we are retesting this horizontal support resistance area at 1,190 as a resistance, and we have failed to pass above it. So, you know, I would really, at the very least, want to see a move of gold above 1190, and ideally above this descending channel, so I can be looking for a bigger rebound. In that case, I would be looking perhaps for a rebound to retest this broken long-term trend line. If I go to the weekly, you can see it there. So if I switch to the weekly chart of gold, which is here, I'm talking about this trend line, right? So I'm talking about this trend line, this broken trend line. So you know, so far we've seen like a super impulsive move lower, because just look at this. This is a weekly chart, right? So look at the series of bearish candles that we had, one after the other. I mean, you know, obviously this has been a very strong move lower. Obviously, though, as well, nothing moves in a straight line, so some kind of a rebound should be expected sooner rather than later. In this case, I will be viewing this rebound as corrective, but you know, that doesn't mean that it can't unfold all the way back to perhaps 1250, 1260. So, you know, we're going to see eventually, sooner rather than later, in my opinion, you know, a rebound, a corrective move, and this corrective move actually might have a decent, you know, a decent distance to cover. So I do think that there will be an opportunity to make money trading, you know, gold counter trend. Now, on the other hand, I have to say once again, the move lower looks impulsive to me. So any rebound, as long as it remains roughly below the level I said, I'm going to be viewing it as a corrective bounce. So I will be, you know, quite skeptical, and you know, I will be expecting that eventually we will be seeing some kind of a resumption lower. Now, if we move on to the rest of the metal, because I know I wasn't here, you know, the previous week, and I know that
one of our friends,
you know,
asking for copper actually. So if you can,
yeah.
have a
Before we go to copper, I wanted to show palladium, because palladium actually, as you see, that's why I'm such a big fan of horizontal support resistance areas. I mean, just look at this huge capitulation day lower that palladium had last week, the same day actually that the other metals bottomed, which actually made it exactly to the level, to the horizontal support level that I was targeting after we broke below this very important ascending trend line support that was defining the uptrend for a big period of time. So we made it there, and so far we've seen like a V-shaped recovery. So obviously, palladium's rebound looks much, you know, much more constructive. And to be honest as well, the whole move lower in palladium looks a lot less impulsive. I mean, this move to me, I mean, let me zoom out so people can see it. This move, this whole move higher, looks quite impulsive, and the move lower so far, I can't really say that it looks impulsive. So, you know, if I had to be long one of the metals, palladium definitely looks at a much better position in comparison to gold and silver, right? So if I had to choose one of the three to be long, I mean, I would definitely choose palladium, no questions asked. Now, platinum did produce follow through to the downside after breaking below this triangle, which, you know, I was also mentioning that this is most likely another bearish consolidation. We had said alternatively that the only bullish scenario that could come up from this triangle is if it ends up being an inverted head and shoulders formation, which I had explicitly said that that's like a secondary option, since we have to respect the very strong downtrend and consider this as a bearish consolidation that will eventually get resolved to the downside. That actually did happen. I mean, we did have this push lower, but we seem to have also found some short-term bottom. I mean, obviously, the market is exhausted. I mean, the bearish momentum has been exhausted. You also see some quite interesting RSI divergence here on the daily chart. So this also looks like it can be rebound higher. But as I said before, for gold and silver, I think the same applies to platinum. I would be looking for any rebound to end up being corrected. Now, having to do with copper, let's switch to copper. Copper has actually 2 days ago, but unfortunately last week, for those of you that follow daily, I was on vacation. If you remember, since the beginning of breaking below 294, since we were actually striving to continue the uptrend, and we were in this formation, I was viewing this as a corrective formation that should get resolved to the upside. That's actually what happened, but instead of pushing to new highs, we formed a double top, and then we impulsively started pushing lower. Once we broke 294, I had defined this 294 area as the bull bear line in essence. As long as copper traded above it, I maintained a bullish bias. But once it broke below it, we had to view this as a double top with whatever implications that has. Which means, as a double top, you expect that the target after breaking lower is the extension of the range that you had. That's why you see here I had marked the extension of the range came at 256, and actually last week in that last push lower that we had, we tagged that level almost to the paper. I mean, we passed just below it. I mean, just for a few cents below it momentarily, which means that we have now completed the double top target. And that would make me a lot more skeptical in looking for more downside before we see some kind of a relief rally. So I think that we should respect the possibility that copper will react higher. The first area of resistance is a previous area of support, which comes at 273. So I would be looking for 273 as the first area of resistance. If we actually make it above there, at some point we might even retest the 294 area. But as the 294 area was very important for defining the bullish trend, I think it's going to be equally important for us maintaining a bearish bias, meaning that as long as the pair trades below 294, I will also be viewing in this pair any rebound as corrective and not as something more than that. So bottom line, between the four metals, I think by far the most constructive looks to be platinum. The others seem capable of perhaps extending these rebounds a little bit higher, but I wouldn't expect that we will be pushing much higher levels. I think that the eventual moves are going to fail. So I think that covers all the metals. Let me go through crude, because first of all, I have to say that I'm still holding half of my short in crude, and I like to keep holding it as long as this previous support area is acting as resistance. Ultimately, I would want to see a move down towards 63.80. Roughly at 64, I'm going to be looking to book the rest of my short. I have to say that obviously the fact that we broke below 66.30 is quite a bearish development, but we have to acknowledge that crude has found support on the 200 DMA. And my actually long-term bullish bias hasn't yet changed. So I am looking for more downside, but I wouldn't be pushing for much lower levels. I mean, 64 is what I'm looking to book the rest of my short, and I'm going to be more than happy if we make it there. That doesn't mean that crude could move even lower from that. I mean, it could even make it down to 58.70. Why this is another important level. You can see it back here. It was acting as a resistance for some period of time. Then the market, after breaking higher, decided to back test it as support, and it worked just fine. So I do even see the scenario that crude is going to make it down to 58.70. But you know, in order for that to happen, we need to clear this quite important zone that's between, let's say, 63.60 and 64 dollars. So you know, that's what I'm seeing with crude. Stelio, are there any currency pairs of the major that Blake or you didn't cover?
I think you're covering them all, Steve. And welcome.
Hey, Blake. Thank you, mate. Sorry for being late today, by the way.
Oh, no problem. Yeah, no, we covered all the majors, and actually, before we sign off, I just want to make sure that we do mention that if you guys enjoy these free webinars, make sure that you visit our sponsor, Forest Park FX. They are the sponsor of this webinar, and you know, they're here to help you find a good broker, and it doesn't matter what type of trader you are, you should contact them, because if they can't, they're going to find a broker that meets your needs, and perhaps you know, if you live outside the United States, you can use the reimbursement program and get ForexAnalytix for free on top of finding a better broker. And if you live in the US, they could probably find you a broker that'll fit your specific needs directly. So make sure you contact Forest Park FX, you know, whether or not you're a ForexAnalytix subscriber. And no, I mean, that's pretty much it. We covered all the majors. I'm glad that you made it safe. How's Port Tahili?
It's very beautiful, actually. I'm going to send you pictures later. It's very beautiful. I mean, we're staying on a hotel right on the bay here, so you know, we have you know, part of the sea that in essence belongs to the hotel. I mean, the hotel is very nice, and I think we're going to have some nice relaxed vacation, because you know, when you have a toddler running around, not having to you know, to take the car and go different places helps a lot.
Yeah, I was telling Stelios, we friended last time we were there a few years ago. We friended the British couple at that time that owned the rental, one of the rental places on the beach. I'm sure you're going to be right over there in the bay where there's a little beach area, and they have like all the beach rentals. And I forget what we rented from them. We rented like some like floats or something from them, and really nice couple. They're from the UK, that they left everything and moved to Port Tahili to start their business. So I don't know if they're still there, but if you meet some people from the UK that own a rental thing, you say, hey, I have a buddy that met you guys from the United States years ago. So
I promise I'm going to do that.
Right.
Because I bet not a lot of British owners of businesses are around here, so you know. No.
That's why if they're still there, you'll know who I'm talking about. It's
absolutely.
So great. Well, Steve, thanks for being here today, and Stelios, thank you as well. We're going to we don't have any interviews this week, so so you guys have a wonderful trading day, and we'll see you back here tomorrow to do the here. You know what? For those of you that were a little bit late, let me go ahead and take back over really quick. Give me 1 second, and this way you can capture the bias chart for those of you that missed it. And I want to say that we've got something in store for you in the next couple of weeks. So the bias chart that you're seeing here being built, get used to it. Get used to it, because it's going to be a morning staple for us moving forward. So, all right, Steve, Stelios, thank you so much for being here, guys.
Thanks, Blake.
Thank you, Blake. Have a nice rest of the day.
You guys do, and ladies and gentlemen, thanks for tuning in today, and we'll see you tomorrow morning, same bat time, same bat channel. All right, bye-bye.